Fair warning, I'm inspired this morning. All 7 of you. Rohan, welcome to the room. It's nice to have you with us. Andy V, Ron C, Victor, Andy Man, George T, Mike M, Miss Jen. Now everyone's starting to come in. Once you hit that start button, there it goes. It's FOMC day today, guys. 2 p.m., high impact, FOMC minutes. Good morning, George. If you've never seen FOMC, it's a lot more fun on a Renko chart, but you're going to see probably a huge spike in the market, if not a continued untradable speed in the market. And guys, FOMC has been blowing out accounts for as long as I can remember. I've got a pretty good number of them. So at 2 p.m., guys, things are probably going to get a little squirrely. I like to stop trading 20 minutes before because people might jockey for position. And then once the market returns to a speed that you're comfortable with, have fun. Get in, follow your rules. But I check that every morning, guys. forexfactory.com/calendar. And that is it's just a part of my routine. Cup of coffee, check news. All right. Let's bring up this picture, guys. Every day I have this realization. And I was talking to my brother this morning. Well, I was talking at my brother. He was doing stuff, didn't reply. John Novak, for those of you that have never met him, never spoke with him, never done any time to research him, is freaking brilliant. And he really is. And he makes amazing indicators, and he helps formulate unbelievable plans. My job is to take his brilliance, if you will, and make it accessible to the masses. Everything that he comes up with is amazing. And the way my brain works, I simplify it as much as I possibly can to help new users find success to get to the point where you can access all of this brilliance, guys. So today, we're going to keep it really, really focused. And I'm going to give you guys some things that are going to keep you out of trouble. And I know you're like, well, okay, well, keeping me out of trouble doesn't get me paid. It doesn't. But what keeping you out of trouble is going to do for you is it's going to keep you from losing money unnecessarily while you learn how to get paid. So we're going to focus on both platforms this morning, guys. I've got NinjaTrader users. Rohan, are you on NinjaTrader or TradingView? I want to just make sure. Guys, there is TradingView, and TradingView uses minute bars. And I'm going to give you a rock-solid plan to be able to read these indicators, to be able to find success, to be able to avoid pitfalls. Now, the other platform is NinjaTrader, and it is somewhere in here. And NinjaTrader uses dynamic Renko bars. Dynamic Renko bars are faster. They are going to, you might get 15 or 20 bars in a minute, as opposed to just a minute bar. So when we go through these lessons, ladies and gentlemen, I want you to remember which platform you're on, and there is a plan for each platform. There's a TradingView plan designed to optimize your chances of success using TradingView and the Nexgen indicators, and there is the KISS plan, the Dynamic Renko plan, designed to optimize your chances of success as you learn to read the indicators, guys. So make sure that you're sticking to the plan that coordinates with the platform. I'll drop them both in the room right now, and I'll probably drop these in the room 6 or 7 times before the day is over. We're going to take 30 minutes, and we're going to learn the trigger looks and the Fibonacci rules on Renko for when it's okay to trade. And then we're going to transition over to TradingView, and we're going to talk about how to read those charts to find success, guys. So no matter which market or which platform you're using, you are going to be given a plan. You're also going to be given a spreadsheet with an enormous amount of pictures in it As you learn the plan, and you're going to be given live feedback every day on everything that you do. If you post a picture in my room, we're going to talk about it. We're going to talk about the good. We're going to talk about the bad. We're going to talk about ways to do it better. And if it's perfect, then it's perfect. The one thing that I ask is that when you guys post in my room, you annotate your charts. You tell me what you saw. I want to make sure that you were reading indicators correctly. I want to make sure that you're seeing the advantages the way they need to be seen. When you tell me why you did what you did, guys, very often any mistakes that we tend to make as new users are easily correctable. But I have to know what you saw so that if it needs adjustment, we can adjust it. And that's what we'll do, guys. As long as you're posting in my room, you get a private session. It's a one-on-one between the two of us in front of a crowd, but we will talk about everything that's happening on that chart. The second thing is keep it simple, guys. When I hand these plans out in the room, these KISS plans for Renko bars, guys, this is the best of the best. This is the shortest path to finding consistency. Good morning, Chariot, for the new user, because this plan is designed to optimize your chances of success using what we call a high probability trend trade. Now, a high probability trend trade is a trade that typically wins 70 to 80% of the time. That confidence that it creates through all those victories, guys, is huge for new users. In the Trading View plan, it's the same thing. It's designed to keep you on the right side of everything. It's designed to keep you patient so that you're not trading opinions, but rather every time you enter a trade, as you follow this plan, you have an edge, you have an advantage. And that's what trading is, guys. It's probabilities. It's creating an edge, recognizing the edge, proving the edge, and then sticking to the edge, sticking to the plans, guys. So we're going to learn rules for both. I want you guys to simulate and post in the room. Those of you that post pre-classroom, I think I covered everything and annotated and gave them back to you. If you have questions, please let me know. I'm trying to do that now in the mornings because that way we can spend more time in a live market. Guys, keep it simple, keep it focused. And we're going to talk about indicators, and then we're going to talk about rules. So both platforms have trigger lines, guys. You're going to see small and large triggers. You're going to read them a little bit differently on the two platforms, but you'll always see small, you'll always see large. You're going to see them on the charts, guys. For my Renko users, you are going to use these to define momentum. You're going to use these to define any trouble that might be in your way. You're going to use these to define entries. Triggers tell the story. Triggers tell you 95% of everything that you need to know about what you're doing. You're also going to see areas. And the areas that are consistent between the two platforms are going to be divergence highs and lows. Every time you see a divergence line, it's a negative number with a magenta line from a high. The negative number is a byproduct of the calculation to create it. It has no bearing. A negative number with a cyan line from a low. Divergence is a loss of momentum, and I just want you to think of that way. Every time you see divergence, no matter what chart you're looking at, there was a loss of momentum. On NinjaTrader, you're going to see Fibonacci resistance. Yes. Pete, the S&P will roll the first Monday of September, I believe. It's 3 weeks before the close, so it'll be next month. Fibonacci resistance, ladies and gentlemen, is an area that could stop the market in an uptrend. It could create an untradeable bounce. It could reverse the market completely. These blue Fibonacci supports, as the market moves down, you'll see these as areas that could stop forward progress. You're going to see yellow 1-to-1s. They can stop the market in an uptrend or a downtrend. So depending on the direction of the market, they're either support or resistance. You'll see a mid-band running through the middle. If price is above it, it'll turn green. It may behave as support. If price is below it, it'll be magenta. It may behave as resistance, guys. You're going to see all of these areas. You don't have to know how they came to be, but it's important that you know that all of these areas are reflections of what has happened in the market. So one of the things that you'll notice is that the market respects areas because the market created areas. That's one of our advantages. When you go to TradingView, you're going to see all of the same areas. The only thing that you won't see is Fibonacci. Not yet. So Chart Prime is a different vendor, an amazing product, and they give supply and demand zones. And these supply and demand zones on TradingView, you will need to purchase them after your free trial, but they behave the way Fibonacci support and resistance will. That is the only difference in indicators between the two. That, and then your Chart Prime will use minute bars, and your NinjaTrader will use dynamic Renko. It's a faster look. So for the high probability trend trade, we're going to get into this one. There are only 3 rules, guys. Each rule, when true, creates an advantage. The advantages are why you get into the market. I enter with momentum, clear path, and a well-defined entry because every time I take this entry, it's a pattern that's been proven to win more than it loses. I have an edge. These 3 rules will come to be on only 2 charts. We're trying to keep it simple. We're trying to keep it as focused as we can. Your large chart is a very broad stroke of a brush. It's a slow-moving chart. It's difficult to see change on a large chart. This is going to show you the overall opinion of the market. You will define direction on the large chart through the background color. If it's green, the market's going up. I'm looking to go up with it. If it's red, it's going down. I'm looking to go down with it. You will define momentum through rule number 1 using the first bar on the large chart. That's all you need, the most current bar. And then you're also going to define whether or not you have a clear path, whether or not there's termination conditions, anything that could stop the market in your way. That also will happen on that first bar. That first printing bar is all you need to have your first 2 advantages. I'm going to tell you guys right now, momentum and path. When you understand these 2 concepts, when you focus on these 2 rules, what's going to happen is you're going to set yourself up to find success beyond the highest probability trade. So we're looking at the large chart and we're speaking advantages out loud. When they're present, we're going to go to the small chart, the fast chart, the entry chart, the refinement chart. And inside of this 1 bar, you're going to see 15, maybe 20, 30 bars. And it's the inside movement of all these advantages, guys. We're going to use this entry chart, this smaller chart, to refine exactly where the market is most likely to bounce and continue with the trend. It's going to allow you to reduce risk. It's going to allow you to maximize your profit potential, guys. And we're using these 2 charts, and it doesn't matter if you are on TradingView or NinjaTrader, guys. You are not in charge of the market. Your 2 contracts mean squat to the people that are. The large charts, this is going to define areas, direction, turning points. The large chart is the large crowd, the men and women with the money and the influence to make things happen. They create trends. They establish momentum. They react at those key areas. Your small chart is like it's a refinement chart. It's a small crowd. And these are the fighters. These are the ne'er-do-wellers. These are the folks that when everything says up from the big crew, they're like, let's go down. And guys, they fail like 70 to 80% of the time. So what we're going to do is we're going to use their failure point to enter the highest probability trend trade possible. And you're going to do it with such accuracy that you'll actually wait for them at the failure point with a limit order and an area inside of triggers. So as we move forward this morning, I'm going to cover these 3 rules. We're going to break them down, and then we're going to watch a live market all day, guys. We're going to talk about what the indicators say, what the trigger lines say, what the areas are telling us. If, while I'm watching NinjaTrader, the rules are met from a high probability trend trade or a potential to break trade, guys, if it fits the plan, we'll pull the trigger and we'll manage it according to the plan. This is an education room. This is not me calling your trades. You have to call your trades with your ability to read the indicators. Same is true on TradingView. So let's learn the rules so we know if they're met. Rule number 1 says large chart must have strong trigger lines. Guys, strong trigger lines is the easiest lesson you're ever going to get. And I'm going to tell you that no matter which chart or platform you're looking at, strong trigger lines is the same look. On Renko charts, when the background is green on your large chart, both small and large triggers must also be green. If the background is red, both small and large triggers must also be red. That little tidbit right there is going to keep you focused on having the advantage momentum. So in an uptrend, your small triggers are up and above the large triggers. Your large triggers need to be wide. There is no momentum in flat triggers. They are wide, they are angled up as well. And guys, it is the space that's created between the small and large in an uptrend, or when smalls are below the large, it is the space created between the small and large that lets me know that the odds are favorable for the market to continue up or continue down, to continue in the direction of the trend. Odds favorable momentum is a fleeting thing, guys. Odds favorable momentum is going to happen in bursts. You're going to see the separation, and your advantage of rule number one happens until all the way until the triggers close. When the triggers close, the advantage of momentum is gone. We can sit on our hands and do nothing. And then when it comes back, we'll look for opportunities up. When it goes away, we can choose to do nothing. It reverses, goes down, goes up again. So guys, strong triggers has nothing to do with Fibonacci. Strong triggers doesn't even have anything to do with the bars. Strong triggers on your Renko chart is a separation between the small and large. Can you guys give me a why if you're with me, if you're comfortable with that idea? Because momentum pushes the market, guys, and momentum is what we look for to break key areas, and momentum is even going to cover some of the mistakes that I made as a brand new user. Well, momentum goes away. When the smalls return inside of the large, guys, that is weakness. That is rule number one not met. So your whole job for rule number one is to insist on separation, and when weakness rears its ugly head, sit on your hands. And it's not a coincidence that 4 out of 5 reversals came with weak triggers. When you have weak triggers, areas are more likely to hold. When you have weak triggers, you're more likely to see that retracement from the middle of nowhere. Weak is a red flag telling you that it's cool to sit on your hands and do nothing. So the triggers tell the story on momentum. Rule number 2 says don't trade into an area, silly. They could stop the market. We call them termination conditions. And a termination condition is nothing more than a Fibonacci-based indicator. It's a horizontal line on your large chart. And this is where the large crowd is most likely to make decisions, because that's where they've made decisions. This is where buyers buy, and this is where sellers sell. This is where established trends reverse, and this is where fights happen between the two. So if the large crowd is making decisions at these key areas, rule number 1 for a termination condition, to define a termination condition, is to allow the large crowd to get to that area and let price reach Fibonacci resistance. Let price reach Fibonacci support. And then once it does, guess what? We're done with price. Once again, the triggers tell the story. If all of your trigger lines remain below resistance, resistance is a termination condition. And a termination condition may stop the market. It may create a big, ugly, untradeable bounce that will drain your account. It could break. I want you to accept from day one, you'll never know what the reaction is going to be. You'll never know if it's going to break or reverse. You're never going to know if the market's going to dance there, guys. We're good, but we're not that predictive. But I can tell you from 5 years with the software, when price reaches an area and the triggers don't break it, it's more likely to hold than it is to just break. It's more likely to create an untradeable bounce. It's more likely to create a reversal, which means that if you trade into an area with all 4 trigger lines above or below it, you're more likely to lose the trade. Your edge is no longer in place. Does that make sense, everybody? This is going to save your bacon. Rule number 2 is the most broken rule, because rule number 2 is going to force you to be a little patient. It's going to force you to pump the brakes. Guys, futures markets trade billions every day. We need to capture $400 a day to be in a 6-figure income. Whoops. So let's go to this one. I really need to do this in 2 pictures, guys. When price reaches the area, triggers tell you the story. So if 0 trigger lines are above this area, this is an area that could stop the market. This is an area that could create a bounce. This is an area that could produce a reversal. The same way it did when price reached the area and no triggers broke previously. Do you guys see it? You are in the same look right here. You have momentum going into it. Price reaches it. 4 triggers below. down it goes, avoidable loss. If two of your trigger lines get through the area in question, whether it is resistance or whether it's support, as long as you have momentum, the area does in fact have the potential to break. But guys, two triggers through is kind of a sketchy look. This is not the best of the best look for a breakout. To really feel confident, to kind of get ready to take that medium probability trade, you want three of your trigger lines through the area. You want two smalls, one large, and now this is your best potential to break. This is what it looks like when Fibonacci, when one-to-ones, when divergence highs are on the brink of breaking. It's still not a clear path, so it's still not a high probability trade, but that's a good look. This is going to be the second trade on your plan. Finally, if four trigger lines, both small, both large, get above the area in question, ladies and gentlemen, that area is now broken. Any area of resistance begins to behave as support. Any area of support begins to behave as resistance. And guys, that clear path remains solid until you reach the next line. And once you reach the next line, we go right back to counting triggers. Whoops, wrong picture. So, crude oil's not doing a whole lot. But we can look at it just for an example. Price came down and reached Fibonacci support, and absolutely no triggers were able to break through the area. Guys, give me a Y if you see the reversal. Even with odds favorable momentum, even with strong triggers, that market pushed up. And then it hit Fibonacci resistance to the tick. And the triggers couldn't break, and look at the big retracement. And that retracement came right back to support with all of my triggers above it, at which point the market continues up, hits Fibonacci resistance, creates an untradeable bounce, but continues in the direction of the trend. Weak triggers, there's your reversal. Potential to break, only two triggers did not. Potential to break, only two triggers did not. So guys, your rules are not designed to catch every move in the market. Your rules are not designed to have you active. 95% of your day is going to be spent waiting for an edge. 10% of your day will be capitalizing on that edge. So is everybody good? Momentum starts, sets you up for a market that's going to be difficult to stop. Nothing in the way, no termination conditions, counting triggers. That's going to make sure you have room to targets. Once you have momentum and clear path, once the large chart is done, we're going to turn our attention to a smaller, faster chart. We're going to go to that refinement chart. And that refinement chart says your entry is so specific, or Pacific if you're a 4-year-old, you're going to use a limit order. You're literally going to wait for the market to come to you. You're going to buy or sell a pullback. That's that little fight from the small crowd. And you are going to buy or sell that pullback at an area, at Fibonacci resistance or support, yellow one-to-ones, or a mid-band. Because the same way those Fibonacci areas can stop a market, hey Junior, on a large chart, they can create the bounce we need to continue with the trend on the small chart. But there is one part of the entry rules that I want you guys to write down, that I want you to embrace, that I want you to never forget. The entire phrase is that I will buy or sell a pullback at an area inside of triggers. Triggers are a moving average. There's a phenomenon that you math people know called regression to the mean. And one of the things that happens on your dynamic Renko charts is price returns to triggers. Price comes back to the large triggers on the small chart. There they are right there. Those are smooth. You can use those to gauge momentum. Price pulls back to the large triggers on the large chart very often. So guys, we've put the large chart triggers on your entry chart as well. And when these two are overlapping, one on top of each other, two snakes riding piggyback, you have what we call favorable large triggers, because it gives you the smallest possible retracement zone, guys. Triggers define where the retracement is most likely to go, where the pullback, where the push down is most likely to push down to. Areas inside of triggers are where the market is most likely to bounce and continue with all of the advantages of the large chart. So all that we're we're talking about right now is a pattern. We're describing a pattern. We're putting words to a pattern that allow us to have an advantage. Hey, Jose. And when the large chart has momentum, and when the large chart has a clear path, your job is to wait for the pullback to the area inside of triggers. So the reversal bar begins the pullback. The triggers define the retracement zone. The areas inside of the triggers define where it's most likely to bounce. Your job, Rinko bar users, Ninja Trader users, is to activate a limit order a tick or two above the highest point of support and hope the small crowd fails. This is where you're going to enter the highest probability trend trade. Any lines beyond the retracement zone, any lines below the triggers for a long trade, this is not a part of your entry equation. Once you get below the triggers for a long trade, you don't know if, when, or where that market is going to continue up. We make money both directions, guys. When the large chart is down, when the large chart has momentum, when the large chart has a clear path, or at least that 3-trigger potential to break, new users, you're waiting for a reversal bar on the small chart. Once the reversal bar prints, you're defining where the retracement is most likely to occur with the trigger lines. You are pinpointing where it's most likely to bounce with an area. Fibs, mid-bands, or yellow 1-to-1s inside of triggers. The best phrase you could ever memorize as a new user is pull back to an area inside of triggers, guys. That's where the accuracy happens. Anything above the triggers in a short trade is no longer a part of the equation. Your advantage from rule number 3 is no longer in place. Any lines up here are ignored because I don't know if, when, or where that market is going to reverse. So you can put it all together and you can study this pattern, because when the large chart says up, when the large chart has strength, when the large chart has at least 3 triggers above trouble, you're going to go to a small chart. Small chart is going to have all of this movement. Let's do this real quick so you can see it. Inside of this one bar that gives your advantages on the large chart is going to be a pullback, a bounce, and a continuation if this is part of that 70 to 80%. If this is a part of the 20 to 30% that you can't avoid, that's a cost of doing business, you're going to have a stop waiting just below those triggers, about 5 ticks. Give it a little wiggle room. These are averages. About 5 ticks below those trigger lines is where your advantage is gone, where you no longer want to be in the long trade. And guys, for every 10 trades you take, you're probably going to lose 2 or 3 of them. I want you to accept loss as a normal part of doing business, normal part of the positive equity curve. But the cool thing is you can avoid losses. You can avoid unnecessary losses by following the pattern, by insisting on momentum, at least the potential to break, define your entry with a pullback to an area inside a trigger. So when you guys post your Rinko charts in my room, this is your recipe for annotation. Tell me what you saw, tell me where you did it, tell me why you did it, and you get a private session. And the cool thing is if your feedback, Rohan, Derek, Mr. Paul, anybody in here, if your feedback is, holy smokes, that was the best trade ever, you followed all the rules, you had that edge, that advantage, you have written a recipe for success through your annotations, guys. And it creates a neurological connection between what you see and what it means to you. And this is what makes trading easy. It's the repetition of doing the same thing over and over, the same pattern over and over. And if we scroll back, we see strong triggers. Does everybody see 3 triggers through? 2 smalls, 1 large. 1 large is lagging a little bit here. There's your tail. What does that tail look like on a smaller, faster chart? Pulls right back to a mid-band right there at the base of those triggers. Ladies and gentlemen, this is a trade that you can take. There was a lot of money to be made in that trade. If we roll back, more tails, just circle them every time you see them. What do they look like? Even if it's not. Pull back to an area inside of triggers, guys. All it is a pattern. Learn your patterns, and once you learn your pattern, be able to find these advantages. You're going to be able to capitalize on these advantages. You're going to be able to find trades that have the strongest triggers ever, that have the potential to break areas. And let's go back. There it is on my smaller, faster chart. Brand new users, give me a Y, please, and thank you. If you see that the market pulled right back to resistance, right inside of triggers, creating an opportunity to take that market all the way down to Fibonacci support. Ladies and gentlemen, the keys to the kingdom. The golden goose. The only thing you need to not do is turn that golden goose into fried chicken. Follow a plan, keep it simple. That's the path of least resistance, ladies and gentlemen. That is the path of least resistance as a brand new user. You will grow outside of the trade. There's no doubt in my mind. You'll begin to see more, you'll begin to do more, but everything stems from those very basic rules. The spreadsheet that I dropped in the room has over 500 pictures of Nexgen users doing great things with the software. Go study them, and what you'll realize is that it's momentum, it's potential to break, and it's a pullback to an area inside of triggers. And guys, this particular picture is from 2023. And it's the exact same pattern that we just talked about today in the market. This picture with momentum, the potential to break, and a pullback to an area inside of triggers is from 2022. Patterns repeat. Good morning, Miss Cindy. So guys, learn the patterns. Are there any questions? Rinko Bar users. That's your keys. That's the one. That's the good stuff. Learn it. You have your plan. Your plan focuses on the best entry you can ever take. It gives you a plan for management. Once you're good at this trade, you're going to see the rest of the trades. So now, let's go to TradingView. TradingView is a little different. It's a 15-minute bar, guys. A lot happens in 15 minutes. Exhibit A. So we can't use the same concept to read the large chart, but I've got a plan for you. And when you look at the KISS plan, or the TV plan, it tells you that you're going to use two charts. It explains to you that the 15-minute chart is a roadmap to key targets, guys, turning points, terminations. And it's going to be the small trigger, that you're looking at on this big chart. I watched the market with a buddy of mine yesterday for I think about 3 hours after class, and we stuck to this plan that I'm going to give you. It was worth $1,400 in my account. So when you look at your large chart, your slow chart, your 15-minute chart, I want you to ask yourself, what direction are the small triggers going? Some of you have even taken your large triggers off. What direction are the small triggers going? Guys, they're going down. TradingView users, give me a Y if you see that the triggers are down, because this is going to be one of the most important things you can do. Only looking for short trades. But Mark, what if, guys, in the beginning, only looking for short trades. Second thing you're going to ask yourself, where is the current price in relation to those small triggers? This is how you're going to decide how to manage these trades, guys. If you are left of the triggers, you are on the strong side of those triggers. This is where 1-minute areas have the best chance to break. This is where you'll see people holding for bigger moves. Guys, this is the best of the best. This would be the equivalent of those strong triggers on a Rinko chart. Once price moves inside of those triggers, if your current price is inside of the small triggers, this is kind of a transition between strong and weak. You will want to be aware of any areas on your 1-minute chart, your entry chart. You'll be prepared to manage because it's not perfect. Once you're on the weak side of triggers, once you are above those down triggers, we're still only looking for shorts. We're going with that immediate look. But this is where I want to pay attention to areas on my 1-minute chart. I don't want to enter a trade directly into an area because areas are most likely to create a bounce. Is everybody good with that? What direction are the triggers going? Where am I? Current price in relationship to the triggers. And then the most important question, guys, is there anything in the way? Is there something in the way to stop my good time? Is there a zone? Is there an outer band? Are there yellow one-to-ones? Is there a divergence low? Is there a divergence high? And guys, once you have this, if the answer is there's nothing in the way, you're going to go look for a rules-based entry on your 1 minute chart. Now, there are two types of entries that you're going to see on the 1 minute chart, guys. There are entries that are going to be taken from the mid-band. Those are trend trades. Pullbacks to zones and areas. Those are trend trades. You're going to see an HVA trade, which is a counter trend trade coming from a zone. Guys, these are going to be few and far between, but they do happen, so there's a plan for it. And then finally, you're going to see what we call a momentum trade. When the large chart is going a direction with absolutely nothing in the way, and your small chart has that strong trigger look, that's when these momentum trades happen. So there's two entry looks. This is your trend trade look, guys, and let's make this a little bigger for you. So the trend trade look, when you're looking to continue with the 15-minute chart, guys, but the small triggers have turned against you. You're looking for up, the chart says up, everything says up, but your small triggers have turned down. This is your trend trade style entry. Your immediate thought needs to be, I need to pull back to an area, to a zone, to a mid-band. And when I get there, I need a close on the correct side of the triggers. And if I never get the close on the correct side of the triggers, I don't have to take that trade. I took a picture of it this morning. Guys, I take about 75 pictures a day. Once the small triggers roll, my job is to say, wait for a pullback to an area. I see them. And then I need a close below the triggers. Can you guys give me a Y in the room? This is going to keep you out of 32 levels of heartache. Because look at how you never got a close below. And look at how you never got a close below. Guys, this is the keys to the kingdom for new users on TradingView. Once the small triggers roll against you, sit on your hands, let it pull back to an area. We were doing this yesterday in the afternoon, having conversations. And when the market was all the way up here, we were calling our shots like a boss. Okay, small triggers roll. I'm going to need a pull back to my mid-band and a close above. I'm going to need a pull back to my zone. And there was all of this waiting and all of this tension. But it happened. 90% of the time it happened just the way the rules said that it would. So we're learning to follow a plan. And it starts with the patience of not fighting small triggers. The second entry is a momentum style entry, guys. And the only way you can ever take a momentum style entry is if small and large are separated. That's that strong trigger look. And your small triggers do not pinch and turn against you. This is the only time on TradingView you're going to wait with a limit order. And when the market says down and there's nothing in the way on your big chart, this is when on a small chart, if you have strong triggers, you can sell a zone. You can sell a mid-band. You can sell an HVA line, and you will literally get in right at that area. And it gives you room to get back to trouble. It gives you room to carry that momentum down. So two types of entries, guys. You're going to take a trend trade. This is your checklist for entry. Nothing in the way on the big chart. One-to-ones, not trading in anything. Buy or sell a close on the correct side of the small triggers. You're going to have an HVA trade. And the HVA trade says that you have to hit something solid on a big chart. And you're going to take one shot at the first move going the other direction. And then you have the momentum trade. And this is when everything is screaming and you're going to buy or sell an area. So there are checklists for everything that you do. So let's do a quick large chart read. You guys ready? Cool. So we have a couple of reads here. Can you guys see that okay? What direction are the small triggers going on the large chart? they're going down. So as a brand new user, my highest chance of success is go down with them. Does that make sense, everybody? What I'm doing is I'm eliminating the need for an opinion. Well, I think the market will do this. Who cares? It says down, I'm going down. The next thing I'm going to ask is, where is the current price, that's highlighted, where is the current price in relationship to those down triggers? An easy trick, draw a little line with your brain if you need to. So that's the left side, right? Victor, let's use another word for the left side. Let's call it the strong side. And when I have the strong side, that's when areas tend to break. And when I have the strong side, that's the best of the best, right? But then we ask the third question. Is there anything in my way that can mess up my good time? Do you guys see that zone? Do you see that divergence low? That's trouble. So I see a zone and a divergence low could stop the market. Now you might say to yourself, I have room to get back and retest that low. And you would be absolutely correct. Does that make sense? We've hit it, we're bouncing, but I've got room to get back to it on a retest. This is where TradingView is a little bit different because these bars are huge. But I want you to see the small chart. And guys, this is going to be one of the most important things. Does everybody see that the small triggers turned up against the small chart? The small triggers are now up, which means that my only entry is a trend trade style entry, which means I have to pull back to an area, back to a zone. I have to wait for a close on the correct side of the triggers, and I better make sure that I've got room to trouble, that I've got room to make money. Can you guys give me a why if that makes sense? Because the small triggers have rolled, my rules say wait for a pullback to an area and a close below small triggers. And guys, it's rinse and repeat, rinse and repeat, rinse and repeat. So let's go see what happened on our read. Well, it pulled back to the zone. This is a big emotional run. It did pull back to the zone. It did close below. That's an awkward look, I'm not going to lie. The S&P is doing the same thing. Guys, this is opening volatility. Look how big that bar is. And it's directly in. Gotta get to the other side of these areas. And guys, it did it in one bar. Sometimes it's not your trade. Sometimes it's not your money. All right, gold. Small triggers are up. I'm only looking for long trades, but I am on the weak side of small triggers, which means I want to be aware of anything on the 1 minute that could stop me. That's my management piece. And because the small triggers turned against me, I need to close on the correct side of them. And all we got was down bars, down bars, down bars. There's your first up bar, but it doesn't close. There's your second up bar. That's the one that I believe finished on the correct side. And that's when the market starts moving back up. When I reach this zone, I'm break even. Because from the weak side of the triggers, this zone could stop the market the same way it has twice. Does that make sense, everybody? Triggers create patience. Close on the correct side creates opportunity. Location versus these up triggers lets me know how aggressive I want to manage when I get to that area. Make sure that you have room to make money. Otherwise, let it bounce and pull back. Guys, that is TradingView. That is Rinko. And the plans are simple. They're clearly outlined. You have a checklist for entry, and you can create expectations on either chart based on what your triggers are telling you. Price reached a divergence high. Absolutely no triggers broke. No long trades. And guys, look. Look what happened. Price reached the divergence low. No triggers broke. And guys, it gave a huge bounce that went to the wrong side of the triggers and probably stopped you out of a trade. The same is true with only 2 triggers through. Blew through everything, pulls you out of a trade. It's okay to wait for the best of the best. Guys, that is your basics. That is your foundation. That is the core to everything you're going to do. It all starts on the large chart, guys. Does the large chart give you the advantages that you need to take an entry? If it does, go find an entry. So you can use that concept of advantages. If you have momentum in a trade, and we'll call that strong side of the triggers on TradingView, if there is nothing in the way, if you can define your entry per the checklist, you have a high probability trade. You have the highest chance of success. This is the best of the best. These are the ones where management is a little more loose. If you are missing one of your advantages, you are now in a medium probability trade. So the first advantage that you're going to take a trade with it missing is going to be that 3 triggers through. It's on your KISS plan. So if the clear path is gone, you're going to rely heavily on momentum in that entry area before you take the trade. If 2 out of 3 of your advantages are gone, guys, if 3 out of 3 advantages are gone, it's okay to do nothing. You're in low probability, and I can't imagine anyone in this room would tell somebody other than themselves, tell your spouse, your children, your uncle, your grandparents, hey, why don't you risk all your cash on a low probability trade? Why don't you put your pension into a low probability trade? I know you've been saving up for a new car, but why don't you stuff it into a low probability trade and hope for the best? It sounds ridiculous when you say it out loud, right? You guys will probably do just that as brand new users. I did it as a brand new user. I can't find rules, but I'm sick of waiting. I'm going to get into the trade. Guys, that is where posting in the room pays dividends, because most of the time you won't realize you are breaking rules. In the heat of the moment, when you're looking at the market, you're like, oh, it was perfect. And then you drop it in the room and I see your annotations and I get to give you feedback. And I get to say, hey, maybe it wasn't perfect. An example of feedback. We did a lot in the room this morning. So Paul, I'm sorry, I got to put you on that pedestal because I remember this one the best. And this is what I will do with everybody in this room, every trade that is posted, guys. Paul says, I'm on 15 minutes, they're up, but it's the weak side. 1 minute long trades, not winners, never should have entered. That was his annotation. And Paul says, okay, that probably wasn't my best. And then I go back to the core, to the basics. Because you're on the weak side, it's best that there's nothing in the way on the 1 minute. That zone was something in the way on the 1 minute, guys. And look how the zone held, even though the triggers are up. And sure enough, down it goes. And then there was also, Paul got in on the wrong side of the small triggers from the pullback. So it's kind of a double whammy. 2 great lessons. And I'm telling you right now, guys, it takes courage to post in a room. It takes courage to put yourself out there. It takes courage to share mistakes. I realize that. I recognize that. I try to be as warm and fuzzy as I can. But I'm still going to tell you if you were wrong, but my promise is I'll teach you how to fix it. So as we go through the rest of the day, guys, everything we look at, we're going to go to the core basic concepts of the plans, hoping that repetition creates recognition. I'm going to encourage you, take as many pictures as you possibly can. Annotate as many pictures as you possibly can. And the people that take the most pictures, the people that post in the room the most, those are the people that typically find success the fastest. Guys, we are in August. I am at 6,900 pictures so far this year of study, of feedback, of annotation. And I'm telling you, it is difficult to write on a chart 100 times and not get the lesson. So use that. I'm going to run a lap, guys. I'm going to go stretch my legs real quick, say good morning to my wife. I'll be back in 5 minutes. When I come back in 5 minutes, we're going to look at the pictures posted. We're going to watch the live market. You guys are going to ask a million questions and break 1,000 rules, but you're going to post them in the room, and we're all going to get smarter for it. So I'll see you in about 5 minutes, guys. Go stretch your legs. Get back to work. Your TV charts seem froze. They're good now. Weird just when I believe TV doesn't crash. I know why. It was pre-news. They are indecisive. So it was frozen because nobody was making it move. That's kind of cool. All right, guys, so let's do our large chart reads real quick. This is crude oil, and we're going to talk about exactly what we see in the moment, how to read the chart, how to understand. So the first question, hold on, let's put this up. Uh-oh, where'd it go? Guys, I'm going to lay this right on top of the chart. If the perfect trade is momentum, a clear path, and an entry, this is how I want you thinking every chart. Let's start with, before we ever get to the rules, is the market going down or is the market going up according to the background? And this is where I'm going to sit in an awkward silence until somebody answers. It's going down, absolutely. So my highest chance of success comes from going down with it. And then I ask myself, do I have momentum to the downside? So I've got small triggers down, but my large triggers are up. So does everybody remember the lesson that if the colors on your trigger lines don't match each other or the background, you do not have momentum? Give me a why if that makes sense, new users. Because the colors of my trigger lines do not match, I do not have the advantage of momentum. And now I'm looking for short trades because I want to trade with the trend. You could stop right here. You could say, you know what? No trade. And what you would find if you embraced that is you would probably not lose as much as you're losing. But let's say, okay, I'm going to look and see if I have a medium probability scenario. Do I have a clear path? So I see an area. Let's count triggers to the downside, guys. I've got 2 triggers below, and I've got 2 triggers above. Now, normally, if it looked like this with momentum, I would say, well, that area has the potential to break. But guys, if we are relying on momentum to break areas, and I don't have any, and there's stuff in the way, do you see how we don't have a clear path? Give me a why, ladies and gentlemen, if you see it. And once again, you could say no trade. 2 out of 3 is gone, guys. 66% of the things you're looking for, this entire large chart is a giant goose egg of advantages. Now here's the question. Oh my gosh, we didn't even look at this one. Price reached an area, all the triggers were above. So not only is that not the potential, that's also a termination. Here's where new users get in trouble. They look at their chart and they say, well, I don't have the momentum that I need, and I don't have the clear path that I need, but look, there's a mid-band right inside of triggers. I should probably go short. And what happens more often than not is they lose that trade because they get sucked in by the small chart. Guys, if you keep it simple, if you keep it focused, a trade is momentum, a clear path, and an entry. And it is your right as a trader to not enter if you don't have it. Does that make sense? That was your crude oil read. And they are still pushing up. Pretty freaking amazing, right? Avoidable losses, guys. All right, S&P. Odds favorable momentum, do you see it? Strong triggers in an uptrend. Rule number 1 is met. I've got 2 triggers above trouble. I've got 2 triggers below trouble. So we are in what could only be called a medium probability scenario with the potential to break. I can still look for an entry, and my entry, if I get a reversal bar, the market is most likely to retrace somewhere inside of these triggers. The market is most likely to bounce somewhere from the areas within, the exact same way It did right here with the potential to break. Pretty cool, right? Everything that we talked about this morning, ladies and gentlemen, happened right here. Now, two divergences on the potential to break is more often than not a killer. And if you are trading the KISS plan, that potential to break, it tells you divergence is going to lose more than it wins. Now, I try to stress that every day. Divergence is likely to lose more than it wins. Not having a termination that reversed the market first makes it a trade that typically loses more than it wins. And guys, every now and then, bad trades, I won't even say bad trades, rules not met trades will win. And every now and then, rules met trades will lose. The key is which wins more? Which loses more? Where does my edge come from, guys? And if I only have two triggers through a fib, and I'm showing two divergences and weak triggers, patterns tell me this market is more likely to push down and not bounce from these areas. And because it wasn't a termination that reversed the market, that increases the likelihood that this market will push down. And ladies and gentlemen, I do not have a crystal ball, but I understand having a plan, having a checklist. And if you went long and just lost, that was an avoidable loss. Does that make sense? Guys, you can call your shots. You can demand that the market gives you what you need. You can avoid these losers. And every now and then you'll get lucky. But luck is not a trading plan. That was fun. All right. This is gold. Small triggers are lifeless. They're no longer up and they're not down. Ugh. I don't have an advantage. Either way. I'm coming from an area above. I don't have any room to an area below. Does that make sense, everybody? And my small triggers are against me, so there's not even a momentum trade. If I decide to go up, I need to close on the correct side. But I'm on the weak side, so I have to be aware of anything. Guys, this is one of those times where you're just kind of like, man, they're not really up or down. I don't see an advantage. They're trying to go down, which means I'm not trying to go up, right? Does that make sense? Because they are no longer up, neither am I. I don't have a short trade, but I could certainly avoid a loser on a long trade. And it really does happen that easily. NASDAQ, they are killing it to the downside. Does everybody see the small triggers down? I'm on the strong side of small triggers. I have nothing in the way until I hit those one-to-ones. So there's two options. If I have strong triggers, I can take a momentum style trade. Well, my zone is gone. My next potential trade, guys, comes from this area right here, HVA lines and the zone. So until it does it, or if it does it, I've got nothing to do. I've got, that's a huge move. That's actually 20 points, 25 points to get to trouble. There are two options, guys. Either I have odds favorable momentum, strong triggers, I'll sell the pullback to the HVA, and I'll just get in right at the HVA. If my small triggers turn against me, I have to wait for a close on the correct side of the triggers, right at the zone. Does that make sense? We are calling our shots, ladies and gentlemen. We're saying my rules aren't met now. This is what it's going to take to get my rules met. If you approach every opportunity in the market like that, what do my large charts say? Where am I in relationship to those triggers? Where does my next trade come from? And then wait for it to get there. S&P, doing exactly what NASDAQ does. Strong side, down triggers. What does the small chart look like? Well, there was your first pullback, right to the HVA, close below everything and down it goes. That would have been a nice one, S&P traders. And now we're in the exact same look as the NASDAQ. I don't have any rules that say just jump into the market and hope. I would need a pullback to something solid and a close below. Does that make sense, everybody? Even crypto. Even crypto divergence highs, outer bands can stop the market. And now every trigger says down and there's nothing in the way. I may have to buy more crypto somewhere down here around 233. All right. Wish we would have been live for this one. Rohan, Mr. Paul, all my Ninja Trader people. And that divergence stopped printing when it got below. Work with me here. Does everybody see momentum? Small's below large? Give me a Y if you see it, guys. We're going to find an entry. I'm going to show you how consistency pays dividends. Does anybody see momentum? Thank you. Do you see that all 4 triggers are below Fibonacci support? It even changed colors. It's now Fibonacci resistance, and I've got nothing in the way. Rules met on the large chart. On the small chart, before I ever get a reversal bar, if you're paying attention to the rules, if I get a reversal bar, the market is most likely to retrace to these large and synthetic triggers. Can you guys give me a Y if you're with me so far? But triggers aren't bouncy, which means that if I get a reversal bar, the market is most likely to bounce and continue with large chart momentum and clear path from an area inside of triggers. That language becomes important. So let's see what happens. The market continues down. I'm panicking. I'm not getting an entry. Life is horrible. I can't believe it. Oh, there's my reversal bar. And magically, I still have areas inside of triggers. My job is to activate a limit order, tick or two below that lowest point of resistance, and hope the small crowd ate their Wheaties. Hope they have a little fight in them. And sure enough, whoops, we messed that up, didn't we? Here they come. See how the mid band comes down as price comes up? Guys, it's okay to drop your order. It hits it, it drops, and what a beautiful winner. Did anybody in the room catch that trade? Did anybody in the room take advantage of that momentum, take advantage of that clear path? Find a way with an area inside of triggers, and then when the momentum went away, did you choose not to enter and avoid that loser? Rules for the win, ladies and gentlemen, over and over and over. And that tail on the large chart was the pullback to resistance on the small chart. Guys, I've been saying the same thing for 5 years. Same thing for 5 years. So let's do some reads. Guys, I don't have a ton of pictures in the room, so we're going to have a good time. I'm going to start at the very top. Most of you have already gotten feedback on these. So what I'm going to do is I'm just going to kind of go through it, and I'm going to grab some random ones that have already gotten feedback, because I want you newer users to see what you're in for when you sign up. Pete posts in the room. Pete says, check it out. Strong bottom. Triggers eventually rolled up. All 3 separated. Odds favorable. 3 triggers through the termination. And Pete is saying, man, this has momentum and the potential to break. Pete just jumps in. Doesn't wait for the pullback. He says, oh, I sure hope it doesn't go without me. And he jumps in and doesn't have any room to something bouncy. And sure enough, the market pulls right back to the mid-band, right there at the bottom of the triggers, and he says, oh, that was the wrong trade. Let me get in the right trade. Now let me show you, and Pete, I don't know if you have your ears on. Let me show you guys something pretty cool. Great entries create manageable trades. This is not, this is not an entry that I teach. This is not an entry that Nexgen has a plan for. And there is absolutely 0 room to make any money on this trade. And that's okay. When you have experience, guys, you might say, I'm willing to take this shot because if it runs, it's going to run. It's got great looks. Pete's locked and loaded for the trend trade, though. And Pete's mind, because he's been with us for a while, says, if this jump in fails because of large chart advantages, it has a high probability of just turning into a trend trade. That's great chart reading, guys. That's understanding the pattern. And it does create a great looking trend trade. And now let me show you the challenge with these jump in trades. Is you're in two contracts here, and you're in two contracts here, and you're out four contracts here, which means that all these two contracts did for you is eat commissions. That's it. You didn't make anything on these two contracts. You had to sit through all of the stress of the retracement on those two contracts. There's an option for you that says, you know what? I'll just wait for the trend trade. And then you make all the money from 62.22 with four contracts, and you take it off up here at 37, and now you make $600 instead of only $300. And guys, $300 is not a bad living. That's one trade. It's a beautiful, beautiful job of reading the indicators, of understanding the expectations based on rules, and Pete does it better than most because he's been with us longer than most. But for the new users, it's okay to not just jump into the market. It's okay to wait for it. All right. Miss Jen. Odds favorable momentum. Close to the termination, not quite there. Pull back to the area inside of triggers. Would have hit your stop, right? Guys, this is NASDAQ on Renko. NASDAQ on Renko is different. It's faster. Jen says because this is a 13.2, not a 5.1, because this is a 34.5, not a 13.2. Nice job, Junior. Show us the picture. We all get excited about you knocking that stuff out. We get more excited when you show us how you did it. Jen decides not to fight the small triggers. She incorporates kind of the same idea that TradingView users have. Don't fight those big, strong, small triggers. And Jen, you're able to ride that momentum up. Absolutely beautiful trade. Nicely done. Nicely done. All right. Let's see what else we have, guys. Not a ton of pictures posted. It must be FOMC day. Must be FOMC day. All right, Pete, let's see what you're doing, brother. Pete says, I love these pictures. Yeah, chop, chop, chop. What does he mean? Guys, remember when we did that large chart read and we said that if the triggers don't match, you don't have momentum? And Pete has absolutely nothing even resembling a clear path. And he says, that's not my money. I don't have the advantages that I need. No trade. Are they going nuts, Miss Jen? Guys, it's FOMC day. If I had a nickel for every nickel I lost on FOMC day, I'd be rich. All right, Miss Jen. Absolutely nuts market. But it doesn't change it, right? Small triggers are down. Let's go through it. Can we have fun with this? Smalls are down 100%. Let me see where you entered. Okay. We're strong side of the smalls. You had room to get to the zone. So does everybody see that the large chart says only look down? If you find an entry, it's probably going to be a good one, and you have room. So Jen just jumps in. And she says, I'm going to jump in with all this momentum. And then she says, oh shit, that's not my rules, and jump back out. That's what happens when you guys break rules. True story. you'll jump in and out. And then, Jen, you've got smalls below the large, larger down, and you sell the perfect pullback to the HVA. The challenge is that you're there. You're at trouble. So it didn't really have anywhere to go. You just didn't have room. So from 23,200, was that your entry? You entered at 86, and the top of that zone is 88, which means you had 2 points before you hit something that could create a bounce. Does that make sense, Jen? And I don't know what it did. They're clearly trending down strong. Oh, look at that. Right at the area that we knew about. Pretty awesome, Jen. You traded to it. You got out at it. You just didn't have any room. And there's a point where you have to ask yourself, is it worth the risk to make 2 points, right? Is it worth the risk into the zone? And then look what's happening right now, guys. The small triggers have turned up, right? So the smalls are down. I'm transitioning, and I have absolutely nowhere to go. That's your chart read right now. So if I'm watching NASDAQ, my smalls are down. I'm only looking for short trades. New user. So Victor, here's your one-on-one on how to read a large chart. Smalls are down. My only option is down. Most current price is trading inside of the small triggers, which means, hold on. What does inside of the triggers mean to me? Be aware of 1 minute trouble, get ready to manage, right? So I want you guys to associate where it's at with what it means. And then finally, is there room to go anywhere, Victor? Do you guys see it? No room, no trade. And look what's happening from that zone. Small triggers up. What a great way to avoid a loser. The large chart said no more shorts. It doesn't mean go long. Doesn't mean go long. It means don't believe just because you didn't catch something here that you're entitled to money. Your indicators say no. Jen, yeah, it's a little squishy. It's behind things, so it's hard to see the numbers. You were in at 86, so you got in below the zone, right, Jen? You got in below the zone. Ah, that is a little hard to read sometimes. Thank you for that. So you got in at 86, and you just took $200 real quick and got out and got paid. Jen, I apologize. You did not trade without room. You traded below it. And you got out assertively because the smalls were turning. Nice job, Jen. Sorry, I missed that one. Good job. And guys, just, man, I hate to admit it. I really do. But I am human, and I'll make a mistake every now and then. Correct me the way Jen did. Thank you. And then, Jen, you said you chili dogged. 21.90. So right here, everything down. Everything is strong. Room to get to trouble. And you just jumped in. Thank you for that, Junior. Appreciate it. Love you back, man. Everything says down. And Jen is developing the Trading View Chili Dog. For those of you that aren't familiar with the Chili Dog, it was developed by Ron in this room. And the Chili Dog is a pretty cool trade. The Chili Dog is the idea that when the market is absolutely screaming in the direction of a trend, and the small chart is absolutely screaming in the direction of a trend, and there's nothing in the way to jack up your good time, you can usually just kind of jump in and take quick profits. Pull 100 out of the market real quick, pull 200 out of the market real quick, shut it down, wait for the next trade. So what Jen has done is taken that brilliance from the strong side of small triggers and all the room in the world. Jen says, I'm going to jump in. I'm going to make sure that I'm below these small triggers, but I'm not going to hold forever. I'm going to capture 100. I'm going to capture $200. And Jen, you got out of this one, that's $200 per contract because it's the NASDAQ. Could you imagine doing that on a 5 lot? Making your $1,000, shutting it down, writing letters to people telling them how much you love Nexgen. So guys, everything comes from momentum and path. And once you understand momentum and path, it really does. It sets you up. So guys, there is a trade that says if the 15-minute zone is reached, if the small triggers get above the large triggers, you can take one shot buying a pullback to the HVA. This is your HVA trade straight out of the plan. It says, whoops, zone reached on the 15-minute chart, check. It says 1 minute small triggers are above from the high or from the lows, check. It says buy or sell a pullback to the HVA line on the 1 minute chart, check. The only thing that we don't have is the pullback yet. If I get my entry, I'll hide my stop somewhere behind this zone. Guys, these bars are huge right now because of FOMC day, because of volatility. But I want you to see something. I want you guys to see something. What do the trigger lines say on the large chart? They're down, and they're down strong, right? And then Jen asked earlier, Mark, do we pay any attention to the large triggers? Give me a Y in the room, ladies and gentlemen, if you recognize that this is odds favorable momentum to the downside. This is strong triggers to the downside. This is giddy. So, Victor, this is the one exception. If I'm thinking about going counter trend trade because of a green line, am I going to go counter trend against a market that has pushed down 320 points that still has odds favorable momentum against it? Does it feel like my best chance of success? It's a little aggressive. It's a little assertive, isn't it? Would you agree? Anybody in the room disagree? Do you see that the small triggers have turned against me already on the 1 minute chart? So if I were going to take this entry, if I were going to try that one shot counter trend, I'm getting to the transition side, I would want to see the HVA line, and because these small triggers are down, guys, I would be happier with a close on the correct side of the small triggers. Does that make sense? So we'll see what it does. Victor, does your chart look right? Crude oil caught in between ranges? It looks right to me, man. Where did my crude oil go? Hold on. I lost my crude oil chart. Let's build a new crude oil chart, guys. If we go to Nexgen Pro Trader Funding, and we go to the instructions, and we go down to the indicators, and I go to the pre-made worksheets, and I click on crude oil, and I copy the workspace that comes up and save it, what I can do is go back to my desktop, and boom, instant crude oil. And now I just got to get to where I can see it. So let's see if it looks like yours, Victor. Looks exactly like yours. I think we're good. All right, guys. That was so easy, right? So do me a favor, show of hands. Who is using TradingView to beat the to take the evaluation with the prop firm? How many prop firm users do I have in here? I was talking to John every day. I'm going to teach you guys to beat the evaluation. I'm going to teach you guys to beat the evaluation. Does anybody want to fail their evaluation? Hey, Dab Chain, good to see you, man. You all want to win, right? You want to win. So how do we win the evaluation? How do we beat the evaluation? Well, if your small triggers are down, you go down with them. Give me a why. If that hit your eardrum, rattled around your brain and made sense. Now, what does that mean? Hold it. What does that mean? It means that my only option right now is shorts. And what it means, guys, is that it takes the HVA trade from a termination out of the equation for you. Does that make sense? It means absolutely no buying that green line because these triggers are down, and it pulls one of the trades out of the plan. So your first step to being successful, guys, your first step to having a solid approach at beating the evaluation. I hope my brother doesn't whip my ass for telling you guys this, but he wants you to win too. Watch this. I'm going to take every indicator except trigger lines off of this chart. Every indicator except trigger lines. Get those bands off of there. Crude oil inventory's got you. So check it out. When the small triggers are up, do you notice how the market goes up? Even from the weak side, it still continues. And then when the small triggers go down, I'll be damned, the market does in fact go down. Now this is pulling the idea of having great entries off of the table. It's supply. I'm sorry, Andy. Let me stop my lesson for Victor's question. My bad. Victor, they're supply and demand zones. They're created from historical pivots in the market, and they give you an indication of exactly where buyers and sellers have done business. You're okay. So as you come to TradingView, I want you to think of these zones. I want you to think of them exactly as you think of Fibonacci resistance and support. Zones can stop the market. Whoa, what did I do there? Zones can stop the market. Zones can create a bounce. The same way divergence, one-to-ones, VWAPs, divergence, the same way all of these other things can stop it. So just treat them like they're fibs. Have that same mentality. I don't want to trade into a zone and hope it breaks. I want to force that zone to break. Does that make sense? Cool. When the triggers are up, ladies and gentlemen, the market goes up with it. When they turn down, maybe a little opportunity. When they turn up again, it goes up with it. When they turn down, it goes down. When they turn up, it goes up. So TradingView users, your first cheat code to beating this evaluation is don't fight the small triggers. Just go with the flow. And I'm going to tell you right now, and I'm going to say it with all of the love I can muster. You are going to want to take a long trade because of the small chart in that transition on that weak side. And you're going to be so tempted right here to go short. And there's little short-term nonsense in there, right? But it's not high probability. And we watched it yesterday, guys. If you watched the NASDAQ yesterday in the afternoon, during that whole push down, there was a point right here where they turned up, and in the entire day, pretty much, it was nothing but short trades. Nothing but short trades. Nothing but short trades. I think I took a long right here because I had a zone, and then it went right back to nothing but short trades. And if you fought those triggers, you lost. And we watched it for 4 hours yesterday, and all we did was follow the triggers, and I don't think we took one loser. It just paper trading, having fun with it. And I think we caught maybe 4 or 5 winners, guys. So it's fun to try to go counter trend, but it's easier to go with it. So that's your first one. The second thing, guys, entries. You've got to take the correct entries. The correct entries reduce risk. The correct entries keep you from fighting. And there's 2 entries. The first entry, the most common entry, if your small triggers turn against you. The second your small triggers turn against you, I want you to say, because they turned against me, I have to wait for a pullback to an area, a pullback to a zone, a pullback to a mid-band, a pullback to one-to-ones, a pullback to something solid to create a bounce, and then I need a bar to finish above the small triggers. Not 50-50. I need a clear finish above those triggers. And look what happens. That's where the market continues up. Does that make sense, everybody? Your small triggers rolled against any short trades, and the market retraced. Your small triggers have turned against the trade. The market's back to the zone. If you wanted to take an overextended, below the zone, everything down kind of trade, you would need a close on the correct side of the triggers. Does that make sense? And we still don't have it, do we? There's still not a close on the correct side of those small triggers. Give me a Y if you see it. Guys, that is your safeguard. Once those triggers roll, be patient. And if you do this, you're probably going to win more than you lose. The second entry is a momentum entry. And the second entry is 100% dependent. If you don't have strong triggers on your small chart, do not use a limit order. If you don't have strong triggers, I'm not giving trading advice. I'm giving you rules. This is when you can use a limit order at an area because of the strength. This is when you wait for a close on the correct side because small triggers up is not strength. And just for grins, 2, 1, close. If you took it, your stop would have to go above. You guys just want to see if the market pushes down with every indicator down below the zone with strong triggers? It may not. That's a 4 lot. Sorry, that's my stop loss. Guys, it's an extended move. It's okay to not be in every trade. But that would be exactly how you would need to wait for it. You would need to wait for a close below. You would have to put your stop where the market shouldn't go. And guys, that's a lot of money in this volatile market. That's 84 ticks per contract. That's $720 risk on a move that has been extended and exhausted and trying to break below a zone. Watch the video of today's class again. You need a few more times to see and hear. So it's absolutely, repetition creates recognition, Victor. Repetition creates recognition. Doing the same thing over and over sets you up for that long-term success. I can't even watch this one. But we'll see if it gets above the zone or not. But guys, see how it's starting to pull back into the trouble? See how it did the same thing here? Let these things break. Let these things clear. Did inventories break it loose? Big spike. Guys, crude oil's kind of a mess right now. Crude oil's kind of a mess right now. S&P is trying to go down, but they're back above trouble. NASDAQ's trying to go down, but they're back above trouble, back into trouble. It's cool to do nothing, right? The NASDAQ isn't choppy yet. It's just at trouble. They tried to break. They didn't. And sure enough, they still haven't gotten above it. You'd still be in that trade. But it's okay to do nothing, right? It's okay to relax. It's okay to say, golly, I didn't get paid here, but that's not my best look. And if I take an entry, I want it to be below trouble. I like to do this. I like to take a line and put a green line right at the bottom of these zones and say, I won't take an entry above that green line. Because that green line puts me right back into something that could stop the market. That's a little trick that I do when I trade. And once the market trades above it, I don't want to be in it. I don't want to be a part of that. And guys, it's still, because of the down triggers below the zone with the close below, it still hasn't broken above the zone. It's doing everything the large chart suggests. And we'll see how far it goes. But you see how we are below trouble? We defined where the market shouldn't go. You could take a close below. It's not a great look. It's probably going to dance right here at trouble for a little bit. But it fit the rules. And it's still going down with strong triggers, below trouble, with a close below triggers. And it's still going down. Kind of crazy, isn't it? How far is it going to go? Hell, I don't know. That little purple 1-to-1 is floating out there. You think it'll go? Should we come back and visit it in a little bit? Does that make sense, everybody? Nothing but shorts. Get in below trouble. Get in on the correct side of the triggers. And guys, it's still going down. It's still going down. I don't like the look. But it fit the rules. It was hard for me to read it. But that entry, 23.96, it's below the trouble. Just a tougher look. Dab chain, chili dog is excellent. Yeah, it is. Good to see you in the room again, man. Your charting says I remain a moron except when I chili dog the open. Missed your voice, and the free 50K with 25K for 50 bucks. It's amazing, right? Propped it this morning for the first time. Great. When I don't have a zone anywhere, I look at Ninja to see if it has any information. Do you ever do that, Mark? I have been known to, Jen, because I have NinjaTrader. Why wouldn't you, right? If you have it, look at that. It just created the zone. I guess we know where that market was likely to stop. These pop up sometimes. TradingView is just like Rinko. It's, do I have the momentum I need to push the market? Is there anything in my way? Let's define an entry. And then it's just rinse and repeat over and over and over. So Jen, let's do that. Let's look at let's look at NASDAQ. Oh, hold on. Let's do it even better. 1 second. I'm going to show you a little toy that John Novak gave me. Here's your 15-minute chart. There's your 1-minute chart. So built a little cheater for dynamic Rinko. And then there's your Rinko chart. To the tick, guys. It is not, Jen. You have to have a secret handshake. You have to have a secret handshake for this one. I mean, you could build it if you wanted to. Or, hold on 1 second. You could build it if you wanted to. Or I could play favorites and I could drop a zip file that needs to be extracted to your workspaces folder. But all it is, whoops, reload. It's still calculating. All it is, guys, is it's nothing that you can't build. It's a 15-minute chart. It's a 1-minute chart. You don't have the zones, but you have the fibs, right? Look where the market went down from. Termination condition. Odds favorable, momentum, clear path. Probably an opportunity. It stopped down here and created a big bounce. It's still calculating. We'll see when it's done calculating. There we go. But look at your 15-minute triggers, guys. It has been non-stop. This is why fighting those triggers is so detrimental. This is why fighting those triggers is such a problem. And this zone is there, which is amazing. That was your bacon saver. One of the things that I see a lot of people do, and guys, my job is to watch people trade on the prop firm. I see people trade directly into trouble so often and take losers. I see people, and we did this, we talked about this yesterday. There was a trade where somebody was convinced that zone had to hold. And they were treating it like a trend trade, right? So it was a trend trade look at a mid-band. Let's see if we can find one. And they were like, okay, I'm just going to buy the mid-band. I'm just gonna show. It was me. This was me. This was my trade, Morgan. I said, I'm going to go short at this mid-band because everything says down. That was my plan. I'm going to go short. It's a mid-band. That's where trades come from. And my Rinko brain, my dynamic Rinko brain, said sell the mid-band. And guys, I never got a close against the triggers, and it ran my ass over. So make sure that when you are trading view, that you're not using your Rinko ideas of just getting in at the areas. Fighting these 1-minute triggers will absolutely smoke you. And I see people doing that, people that are in the prop firm, guys, and there are no name drops because everybody, I want to win. If you're taking losers in the prop firm, guys, and you're not coming back to the room and getting help, how many prop firm companies say, hey, if you're struggling, come talk to the educator. He'll teach you how to fix it. I see a lot of people fighting triggers and then holding losers, guys. Holding losers for thousands of dollars. Learn how to get paid. Learn where your stops go, guys. Get into the right trades. Get into the trades with advantages. You can beat it. You can beat it. Most of your losers were in the gap theory, Estefania. So you identified the problem, right? And now you're working towards fixing it. That's all we do, guys, every day. What does the chart say? This chart says I don't have momentum and things are bouncing up. My 15-minute chart says everything is still down, but I'm from the weak side. And my 1-minute chart is still pointing down, right? So I can go through and I can say I'm only looking for shorts. I don't have anything on my 1 minute, no areas to trade from, right? If I go over here, my small triggers are rolling up. Because I'm transition, I refuse to trade into the zone. So guys, if you're on the weak side of triggers, this zone is more likely to hold. Give me a Y if that makes sense. If everything says down, I'm not going to argue that point. But if you are on the transition side of small triggers down, this area is more likely to jack up your forward progress. And the great thing is, I'm wound. I'm so excited about TradingView right now. The great thing is that every morning, and the plan I give you says, if you're in transition, be aware of 1-minute trouble, be ready to manage. If you're weak, it's best with nothing in the way. If you learn that rule, guess what? You don't go short into something that could create an untradeable bounce. There is a way to beat the system, guys, and the system is beaten with a solid plan. And here's your plan. I triple dog dare anybody in this room to stick to that plan 100% and not find success. It hasn't worked for me. I can't find more losers than winners with it yet, but it's still a relatively new plan. How closely can you adhere to it? How much time have you spent learning it, right? All right, let's see. And look what it did. It pulled right up to Fibonacci resistance, and then it started right back down. And everything is still going with the 15-minute chart going down. Do you guys see it? Even when you put Renko and the charts together, don't fight the momentum up. Hit an area. Look for an opportunity. Small triggers down. 2 triggers below the divergence. 3 triggers below resistance. If I got a reversal bar, the market is most likely to retrace somewhere in this range. The market is most likely to bounce down somewhere in this range. And I am coming from a termination condition that reversed the market. Do you guys see how quickly you can call your shots with a little bit of study? How quickly you can call your shots if all you do is follow a checklist? My opinions, and I hate to admit this in front of a crowd of strangers, ladies and gentlemen, my opinions suck. My gut is unreliable. My hopes rarely carry a market. My desires have nothing to do with the outcome. I have a plan. No matter which platform I'm trading, the plan became available to you when John Novak and I spent months researching. Well, this plan, Nexgen's been teaching for the last 10 years. It works. I've never had anybody do worse than 70% winners with this plan. We're still getting the numbers on the TradingView plan, and I should probably do that. I should probably backtest the TradingView plan and get you guys concrete numbers. But I can tell you every day that I've stuck to the plan has been a winning day. Every day that I have stuck to the plan has been a winning day. Every time I have deviated from the plan, I've found every loser I could ever hope to find. So that's my own personal experience. All right, Estefania. You're killing me. This doesn't even feel real. So Estefania says, Mark, I have strong triggers, and I haven't reached trouble yet. I'm going to jump in, and I'm going to get out of trouble. Here's the brilliance, Estefania. Got a little trading crush on you right now. Estefania knew about all the things that could stop the market, got paid at all the things that could stop the market, and said, holy crap, it's still going. Let me make some more money. Absolutely beautiful. And then when it gets below trouble again, you get in again. Estefania, that's a lot of money, right? That is a lot of money. Now here comes where Mark is a pain in the ass. Estefania, all those winners you just showed me add up to more than $200. Which means, and don't make me go do the math, which means you're probably hiding about $1,000 worth of losers. Now that's your right as a student, is to hide $1,000 worth of losers. But what I'm going to tell you guys, sorry guys, what I'm going to tell you without hesitation is that losers are where the lessons come in, guys. That losers are where you're going to grow as a trader. The things that we talk about that you've done wrong, where you've made mistakes, where you've fought, where you've broken a rule, those are the things that are going to help create long-term success. And I'm telling you right now, it feels like that had to even out to start on profit and they were gaps. Cool. So you know what was wrong, right, Estefania? You know why you lost those trades? You know what rules you broke? That's what I want to know. It was like $300. 85 to 80. That is 2 contracts, 5 points. That's $500 worth of profit right there. And then back in at 83.50, out at 81. That's another, if it's 2 contracts, another 400. There's $700. You got in again, and I can only assume you made money on that one. So it's about $1,200 worth of wins here, right? It doesn't line up. You get excited when you see the separation of triggers and then realize it's a trap. It's not a trap. It's a pattern. So Estefania, you've already recognized your pattern, but I'm showing your chart because I see it, and it's a great example for everyone else in the room. Guys, Estefania is saying the thing that keeps getting her is this pattern right here. That is a horrible picture to teach that pattern. Hold on. Is that even if you have strong triggers, if price hits anything up here and those large triggers don't follow, the market is more likely to close the gap back to these triggers. And Estefania is saying she's trying to get those trades here, but that damn gap theory, and that's your thing, right, Estefania? You recognize the challenge that's pulling money out of your account, and now every day, I'm guessing, because you're an amazing student, you probably have a note on your desktop that says, look out for the gap theory, right? Or every time you look for a trade, you probably say, hey, look out for the gap theory. Is that fair? Is that right? That's what I had to do because it used to whip my butt too. I would try it right here and it would suck back on me. And that's just a part of it. And you're getting better at it because every day you get a little bit better. So Estefania, awesome, awesome trades. And guys, if you're taking losers, post those losers. That's how you're going to get better. All right. Victor. When you get bored. I like that you said you got rolled. Estefania is a little gangster here. I like it. Got rolled. All right, guys. You guys want to beat up Victor and just absolutely destroy his hopes of being a great trader? Smalls below the large, larger wide, and Victor has momentum. 4 triggers below the area, hasn't reached the next area. Victor has a clear path. Pull back right to the mid band, right in the retracement zone. Victor has an area. Victor makes all the money. Can it be that easy? And that's a rhetorical question, ladies and gentlemen. Can it be so easy that all you have to do is follow a checklist and give yourself an edge, an advantage, and possibly have the potential to win more than you lose? Victor, when you entered this market, how did you feel? Were you stressed? Were you nervous that momentum wouldn't push the market? Relaxed. So guys, I've been saying the same thing for 5 years, and Victor just traded it, and Victor just made a lot of money on it. When you have momentum, I mean, we're still waiting for it, right? When you have path, life is going to be pretty easy. When you fight, when your areas are not on inside of triggers, right? I don't even know where we're at. When you're trading directly into termination conditions. But when it starts to break and gives you a shot, maybe you'll find a way. Here's the lesson I really want to get you guys on. Hold on. Let me see where we're at. Okay. This is a good one. Is anyone tired of hearing momentum path and entry yet? Is anyone sick of that lesson? Saying this is stupid. The market trades billions and you only want me to make $100,000 a year off $400 a day? Mark, that's crazy. Well, you're not doing it yet, right? So you should probably learn how. Give me a Y in the room. This market had strong triggers. Had odds favorable momentum, had a market where the odds were favorable for it to continue down. Does everybody see it? Can you give me a Y? NinjaTrader users, repetition is what makes this the best. Repetition is what sets you up. Cool. The market did not hit an area. All of my triggers were below an area. I had a clear path. Some of you, and here's a great lesson, are saying, but Mark, it hit that divergence low. That divergence low didn't print, ladies and gentlemen, until all the way up here. You had a clear path. Is everybody good so far? That large chart was perfect. It is 32 flavors of sexy to go look for an entry. There's my triggers. There's my area on the wrong side of triggers. Now here's the most important question I'm going to ask you guys. Do you see how the entry area, and let me write out the language, sell a pullback at an area inside of triggers? Give me a Y in the room if you see that there were absolutely no areas inside of the triggers. No fibs, no mid bands, no yellow one-to-ones to produce a bounce. Ladies and gentlemen, this would have been an avoidable loser. Because once you get to the wrong side of the triggers, the advantage of rule number 3 is no longer in play. And you don't know if, when, or where the market is going to go down. So your KISS plan, guys, those 3 little things are designed to keep you from giving away money. They're designed to keep you from taking the wrong trades. They're designed to keep you on the business end of success. All right, Miss Jen, smalls are down, weak side of the triggers, clear path. It is an HVA, but without strong triggers, the rules weren't met. So you chose not to take the trade? %, beautiful adherence. And look what happened. Jen, avoidable loser. I didn't know that was going to happen. I've been talking to you guys. Avoidable loser. Beautiful work, Miss Jen. It really is that easy, guys. I promise you. It's not going to feel that easy until you learn how to read a large chart, until you understand what it means. It's not going to be that easy until you realize that that's not an entry because you don't have momentum. But once you learn these very basic concepts, guys, you're going to have what you need. Andy, looks like everything is down. Sold here, out here. Okay. What are the rest of them? Price bar below small triggers. Only thing I'm not crazy about is the small triggers are inside of the large. So Andy, what kind of trade are you taking? Right? That's the question. Where are you trading from? How are you going to manage? And I love these little snippets, right? That's awesome. I am an absolute badass $200 worth. So Andy, everything says down. You're past all trouble. Every indicator is down. You just jump in and you know it's just a fleeting moment. You make $200 and you jump out. It's kind of like a chili dog trade. It's interesting that your indicators don't look like my indicators though, Andy. What news was at 11? I don't have any. Oh, just FOMC Waller speaking. Right on, little medium impact. So Andy, do me a favor. take a picture of your large and small chart for me. Squish them up. Let me see them just a little bit, more like mine is. And will you show it to me? Because I feel like your indicators are maybe off. Or maybe you took that trade earlier and only just now posted it. In at 63. Oh, so you were in way up here. Okay, never mind. This is way up here, right? At 63, your entry was about up here. Strong triggers, nothing in the way. It still feels like your triggers are lagging a little bit. I could be wrong, though. 23,100. 23,100 is right. Man, this market has been moving. Oh, no, that's all the way down here. So that's 23,100. There it is, 23,100. You're in at 23,052. So you're in below, triggers down. Yeah, Andy, it seems like your large chart triggers are lagging a lot. Did you change settings? And if you did, that's cool. But it seems like they're way behind. So Jen, you say that the problem is you have nowhere to go at resistance on the large chart. What direction, Miss Jen? Are you looking for long trades? Why? What direction are your small triggers going? What's the first rule for an HVA trade, Miss Jen? Price reaches a zone. My dear, you have already smashed through the zones. You're on the wrong side of the zones. There's no HVA trade here. Everything says down. You're below trouble. So the thought process here, Jim, is because my small triggers have rolled up, right? Because my small triggers have rolled up, I need to get to an area. There's one. I need to close on the correct side. Your next trade, if any trade, guys, that fits the rules, is going to be from somewhere around here with a close on the correct side of triggers. Does that make sense? I want to go long. There's movement to go long, and some of you will even take the long with momentum, but know that your long is to get to the short. Your long is to get with the short. It's a momentum look. Take care, Junior. It's a momentum style look, Jen, 100%. But everything here says down. Everything here is below trouble. And this is a market that has been screaming down. If I were going to take a trade, I would need it to be from this area with a close on the correct side. Or I need these small triggers to roll to give me some sort of advantage for long trades. Take care, Estefania. The S&P's at a pivot stop out. What's the NASDAQ doing? NASDAQ looks like it might be a good idea, huh? But there's weakness, into trouble, at the mid-band, right? It's okay to let it roll. It's okay to give yourself that advantage. And I think that's the problem, Jen, is your brain saw all of the small chart loving. And these will work every now and then. But will they work more often than they don't? That's the question, right? The question is will it work more than it doesn't work? And the answer is, honestly, not so much. This might have been a little overrun, right? But Jen, if you took it with momentum right at the HVA, you could say to yourself, I know that it's a short-term long. I know that it's the long to get to the potential short. I know it's not the highest probability. I'll manage it assertively. I'll manage it aggressively. And guys, that's where you're headed. Jen, that's where you're headed. That's where, when you understand the very basics, you start to see more inside of it. But if you're not finding success, if you're not winning more than you're losing on your TradingView charts yet, guys, there's a path to keeping it easy. Understanding that that trade's on the way. That's a John Novak trade. That's where John finds the moves within the moves, and he does it really well. And it's the same concept on the S&P right here, right? Coming back into things. It did produce an HVA. We are at the trouble area, so little short-term victories. And that's where you're going to get. And if we get those small triggers to roll, guess what? We've got room for longs. If we get those smalls to roll, we've got room to run, to make some money, to get some cash. All right, guys, I'm going to take a few minutes. I'm going to go run a lap. Post some pictures. Ask some questions. Guys, this has been a super strong trending market. You guessed that Wally did something. Maybe he did, right? That news may have changed the direction of the market. And before I go, if you trade short, you're trading short directly into that. Just saying. From the weak side of down triggers, there's 1,000 things. Remember when it said weak side, be aware of 1 minute charts? I'm rooting for a roll. I'm rooting for a direction change. We'll see what happens. And Victor, yours will be the first picture when we get back. I'll be back in a second. Home stretch. Here we go. Uh-oh, John Novak posted in the room. For anyone who's been doing Nexgen Pro Trader funding or just getting started with it, you've set up a Trustpilot. Would love to have you guys leave a word on the Trustpilot for us. Awesome. Thank you for that, John Novak. And guys, if you're using it, you're loving it, tell the world. Help us out. All right, Victor, here you go. Strong trend, 30 plus bars, no reversal bars. I like it. Momentum, not quite, getting weak. Clear path. Entry area, inside of triggers. All right. We're going to see what happens. Did you lose that one, Victor? Is that the ARG? So let's go through it. Okay. So I'm going to tell you what happened before I look at your other picture. You said you didn't have momentum, but you did have a clear path. And now, Victor, let's use language, brother. You ready? Guys, I'm telling you, the difference between success and failure can be found in language. Come on. So the rules say, sell a pullback, add an area, inside of triggers. Now, Victor, here's your triggers, and all of your areas are on the wrong side. Does that make sense? So you broke rule number 3. So not only didn't you have momentum, you didn't have the entry area. And then, guys, I want to use this chart as an example of one of the things that that I did all the time as a brand new user, and I usually did it inadvertently. So Victor, you said entry area inside of triggers. You didn't say area inside of triggers. Pull back to an area. You said I'm going to enter inside of the triggers, not I'm going to enter at an area inside of triggers. Does that make sense? Because that was all the difference in the world. Because once I get to the wrong side of the triggers, I don't know if, when, or where that market's going to stop. Does that make sense, Victor? So newer users, you're trying to see it? All right. No. So, Victor, you are focusing on the wrong thing, right? Hold on. I just deleted it. Don't. So I'm going to read your after. Your after. You said did not work. The divergence on the 5-1 chart. And you think that's what killed it, right? You saw it and you chose to disregard it. So let's go through it again. And you're going to love this. And I'm going to put this above your annotations. John, go away. I love you. We're erring on the side of perfect right now. So, Victor, you said not strong triggers, right? Because the smalls had worked their way inside of the large. And it's 100% clear path, 100% clear path. So, Victor, that's a pretty good look, right? That's 2 out of 3 on the large chart. I love you, John. 2 out of 3 on the large. Let's let the small chart be the tiebreaker. Now, guys, if you listen to my room, there's a couple things that you hear. Sell a pullback, add an area. And guys, when I say area, I'm super specific every day. Fib, midband, one-to-ones. And then I say inside of triggers. And one of the things that I'm super, super careful not to say is sell a pullback inside of triggers or sell a pullback at an area. The one thing that I am proud of how consistent I am is that I always say at an area inside of triggers. And that's your recipe for success. And the other thing that I say is that once it gets to the wrong side of triggers, you don't know if, when, where it will continue down. Does that make sense, Victor? So, not the best momentum. You had a great clear path, 100%, absolutely beautiful. So you entered inside of the triggers, right? You said, where did it go? And this is where language, where annotation really pays huge dividends. And I believe in annotation, guys. I believe words are powerful. You said entry area inside of triggers. And I know that it seems like a silly little discrepancy. Imagine if you had said entered at an area inside of triggers. It changes the whole dynamic of the trade, Victor, 100%. It changes the whole dynamic of the trade. See here where you entered at an area inside of triggers? In here, you entered inside of triggers. And I know that it's splitting hairs, guys, but the pattern is consistent. Does that make sense, Victor? And divergence on a small chart, when the rules are met on the large chart, it takes 3 of those to stop you. The idea of divergence killing a trade is on potential to break trades. Okay. So do me a favor, Victor. I want you to take this phrase right here. And I know because I had to do this. Write that phrase down on a piece of paper. Just put it right in front of you. Pull back to an area inside of triggers. And it's that phrase right there that changes the whole dynamic of the trend trade. Pull back to an area inside of the retracement zone. That's your money. That's where it comes in. Awesome. And it's weird that such a small discrepancy would make such a big difference. It really is. But let's take a look and see if I can find another example. Well, there it is right there on crude oil. That was only the potential to break. Let's find one where it looks pretty and it just doesn't work when it gets to the wrong side. 601. This is a great example. First it bounces off of the area, inside of triggers, and it dances. Then once it gets to the wrong side of the triggers, that's when it moves up. And John's absolutely right. Sometimes perfect trades are not going to work. And sometimes horrible trades are going to pay you. And the idea is to find the consistency. The idea is to put yourself in a position where you can do the same thing every time because you know that it wins more than it loses. And I think that consistency is a byproduct of understanding that there is a recipe for the best trades. And when you don't have the recipe for the best trade, guys, you're eventually going to learn how to work around it a little bit. And in this particular instance, one of the things that you could have done once you understand the rules, and I like this lesson, John taught me this a while back, is you could still say this is an area that has the potential to stop the market. Every trigger is below it. Everything is going down. The path is clear. Life is good. And these areas could create a bounce. But because they're outside of the triggers, you could say something clever like, because the entry is not well defined, wrong side of triggers, I will force the market to cater to my will, and I will enter only if they provide a reversal bar in the direction of my trade. Sorry, I'm typing fast. Because that will let me define risk. Does that make sense, everybody? Large chart looked good. Large chart was solid. It was still a trigger out, everything down, clear path. But because I couldn't define the entry, because I was on the wrong side of the triggers, that's where you say you pull an audible. I don't have an entry. These areas could create a bounce. Let me force them to create a bounce. Because if initial stops go 4 to 5 ticks beyond the triggers, those areas are already where your stop belongs, already where the advantage is not there. And guys, that's your right. And if they give you a reversal bar, take the trade, right? And if they don't give you a reversal bar, avoidable loss. John, looks like an HVA with odds favorable momentum from a termination, and I'll be damned, the market went up. And everything set down on every chart. You got in on the close below the triggers from the HVA, and I'll be darned, everything went down. You should teach people how to day trade, John Novak. I've already dropped that one in the room. The TV lookalike. I dropped that one in the room this morning for a couple people. The higher divergence, the triggers to look at the triggers to know what will happen. Everything is up, everything is above support, support holds on the retracement, and sure enough, the market continues up. I like it when John posts in the room, guys. You get a little glimpse of where you're headed. You get a little glimpse of when you learn to read your indicators, what you can pull off. And guys, look at this. 15-minute triggers went up. Pulls right back to support. Right back to support. John finds a way on the 1 minute. Pretty cool. Morgan, you said your triggers are different? Oh, Morgan, Victor is on MCL, not CL. So it's going to look completely different. Yeah. And then Andy asked, with Pro Trader funding, can you still come to the class? You can. You just can't talk. Yet. I got to talk to John Novak about that and see what direction we're going. I want everybody to pass. I want a group of super traders. I want to give you guys the highest chance of success. I want to see everybody in this room successful, because if I'm being completely honest, John, close your ears. If I'm being completely honest, I want you guys following the easiest path. I want you winning more than you're losing, and then I just want to copy your trades. Well, I already am, because I trade the same plan, but we want you guys successful. We've been teaching people to be successful for 30 years. It's difficult to hope people fail. So we give you everything that you need to pass. Let's see what happened. Everything says up. John says, wow, divergence could create a problem. Let me take profits and let me manage. Brilliant, John Novak. trading with the triggers, room to trouble, and then incorporating a little dynamic Rinko to tighten up management. And this is a lot of money locked right there. And if it breaks, look at that, turned into a trend trade. Use a pivot, right? Use a pivot for stop placement. John, putting on a clinic. Putting on a clinic. Did you guys know that when I started trading, I would watch John Novak take these trades? I would watch people in the room doing stuff that I wasn't able to do yet. And man, it used to drive me nuts. Used to drive me nuts. Used to absolutely break my heart that I couldn't do what everybody in the room was doing. Used to frustrate me. Used to make me feel like I was never going to be good at this. And maybe I'm a little bit of a soft-skinned whiner. But what I found is that I just wasn't where they are yet. I wasn't where John Novak was yet. I wasn't where the 5-year people were yet. And once I learned the basics, life got pretty good. That's a lot of up movement, isn't it? So let's talk about it. Triggers are up, above trouble, VWAP. I hate the VWAP. And John's working on taking bigger trades instead of smaller trades. So when everything says down, and guys, we looked at this picture earlier. Once the market started going down, it was nothing but down. And it was nothing but down. Nothing but down until those triggers rolled up, and then it was time to get out. Rohan, how are you doing, man? You've been quiet today. Day one's a lot coming at you. I know it is, guys. Day one is a lot coming at you. Every day gets easier. Every day gets better. Okay, this is looking good for a buy trade. Momentum is there. 3 triggers through. The area on the 5-1 is huge. Trying to figure out what my area inside of triggers. All right. So Victor, let's go through it real quick. The reversal bar begins the pullback. Is everybody good with that? The reversal bar begins the pullback. The trigger lines define where the pullback could go, the potential, where the market may pull back. Everybody good so far? It is the areas, fibs, midbands, and yellow 1-to-1s. Let's give this one a different color. It is the areas, fibs, midbands, and yellow 1-to-1s inside of that retracement zone where the market is most likely to bounce. Does that make sense, everybody? So the most likely bounce point was somewhere from that midband to this fib, approximately 12 ticks. Now here's the rule. With all of that momentum, with all of that room to targets, the rules say activate a limit order a tick or two above the highest point of support. That was a good one, wasn't it, guys? Momentum, 3 triggers through, no divergence, strong triggers, perfect entry defined by a rule that is discussed Monday through Friday from 9 to noon to capture the best of the best trade. Initial stop was down here, but once that reversal bar printed, it was up here. So let's go back to the idea that you guys are in control of your entry. Large chart is the exact same, right? Large chart is good, large chart is strong, large chart has room. The initial stop is down here where the market shouldn't go, right, Victor? And you said, dude, that's a lot of risk. This is where you can play your I'm in control card. I'm not comfortable with $300 worth of risk. I'm going to force the market to provide me a reversal bar because the KISS plan says I can reduce risk behind the reversal bar. But what does that do? It shortens the distance to trouble, right? Makes it a little more difficult to make money on the trade. Great entries create very manageable trades. And Victor, with this look on the large chart, sometimes you got to be cool with that risk. Sometimes you got to be all right leaving a little bit on the table. And that's a choice that you guys are going to have to make for yourselves. That's not a choice that I can make with you. The KISS plan says initial stops go where the market shouldn't. I'm a big believer in the KISS plan. I've yet to have somebody that can follow it and do worse than 70%. Miss Jen, right-sided triggers, momentum trade pullback to the divergence. Divergence isn't really a line, Jen. It's just a loss of momentum. You jumped in with everything up and took it to the thing that could stop the market from the strong side of the triggers, right? It's the chili dog. Jen, you have invented the trading view chili dog. You got in above the thing that could create a bounce from the strong side of triggers and room to targets. You found a way to make 14 points. It's absolutely beautiful. I understand your annotation now. Let the market get above something that can create a bounce. And when everything screams up, go up with it. Nice trade, Jen. I'm going to have you write your chili dog plan so you have a checklist for everybody. Boaz. Everything says up, strong trending market. Triggers break the area. The market snaps back to the fib. And you just make money on a beautiful momentum style trade. Because when resistance breaks, it becomes support. Boaz enters on support and rides it up to the next problem spot. Boaz, beautiful trade. Nice to see you in the room. Pete, everything is up. Everything is strong. You're not running synthetics. You had a fib right there. Missed the pullback to support inside of triggers. Caught the second half of it and rode the momentum up to trouble. Nicely done. Two weeks vacation. Nice to have you back. It's good to have vacation every now and then, Boaz. Guys, one of the patterns that I recognize in people, well, actually, I pretty much recognize all the patterns in people. Let me show you how Pete's brain works. And Pete, you're not running synthetics again. I don't know why. This is the trade, Pete, that if I took your last 10 trades without entry, it fails. Probably 70% of the time. So that's a pattern that I can recognize in somebody from the charts they post in the room. But there's also a pattern with Pete that says if it does fail, he has a rock solid trend trade and he's very willing to take that trade and hold the risk. His entry isn't a violation of your rules. It's following his rules. What are you talking about, TradingView? On TradingView, Boaz? So because you own Nexgen software services, because you paid for those indicators, you'll get everything T3. You'll get divergence potential, one-to-ones, market flow, trend bands, and trigger lines. So everything that you paid for as a Nexgen user for NinjaTrader is included 100% over here. Right on, Pete. The one thing that Nexgen doesn't have yet, Boaz, is fibs. So you could run NinjaTrader and plot out your fibs, but there is a company called Chart Prime, and they produce the zone, supply and demand, and these are pretty darn effective. So a lot of people have purchased those to go with it. So you get everything Nexgen. You've already paid for it. You're good. And John says testing the fib pushing later this week. So we're getting closer to it. We're just not there yet. Question mark. When price pulls back to this HVA and the pink one is in the way, hold on. Is that to be noticed? So the green HVA is at 23.30, right, Jen? I want to show you something. $23.30 is directly into the outer band of the VWAP. Do you see it? Directly into the VWAP. So you would be taking a trade directly into something that could stop the market. The pink line doesn't even come into play. The VWAP should be enough to keep you from taking that long trade from the wrong side. Does that make sense, Jen? Triggers up, strong side of triggers, nowhere to go. It's the third part of that learning to read the large chart. And look what the VWAP did. Almost instant. And now the small triggers are down. Does that make sense, Jen? We've reached a termination condition. No more long trades. Oh my gosh, I'm scrolling. I keep asking. I'm like, how come no one's talking? Awesome. Great picture. Great picture. And then John says, check it out. We did have fibs there. And he goes short because he's a Yahoo. Not really. John is not a Wahoo. Yeah, check where the price is on the Big 15. I'm sorry, Jen. I didn't see your comments, and I'm asking you questions and not seeing your response. That was my fault. I'm a man. I don't communicate well. All right, Paul. 15 small triggers roll up from a termination. You get in at 55. You get in on the pullback, but you wait a second. You let it pull back, and then you get in for the HVA. And you ride that thing all the way up to 75. Beautiful trade, Paul. Beautiful trade. Nicely done, man. First it's a termination. Then they roll. Buy it. Great job, dude. All right, John. All right, Boaz. Momentum 50-50 fail. All right. Boaz, I'm going to use you as a shining example for my newer users. I hope you don't mind. And your plan may be a little different. Your plan might be different than the new users. But I want to go through the pretty basic entry rules for those 50-50 trades, for those potential to break trades. Sorry, that's almost too small. The first thing is from a strong top or bottom, and that was a no, unfortunately. Odds favorable momentum, absolutely. Smalls outside of the large, absolutely. No divergence on the 5-1. So we're batting 500 over here, right? We're batting 500 on the good stuff versus the bad stuff. And this divergence is one of the absolute biggest killers of that potential to break. And it did. It pushed you up beyond the triggers. And it was just enough nonsense to get you to the ugly, right? And then that second divergence is probably where it changed direction again. It was a pretty good look over here. Your small chart gave you just a little indication. And then when it's not a strong top, very often they have more trouble breaking these key areas. All right. Rookie question. How do you change text color on your notes on TV? I don't know. I've never tried. Let's go find out. So here's text. And add text. Let's see if there's a color wheel in here. There we go. So the little, okay, check it out. Victor, go to the wheel once you have the check, and then this right here. Boom, bright yellow. Ooh, I like that. Awesome. Ta-da. And did you guys know, Todd taught me this the other day, if you want to take a picture of your large chart, or if you want to take a picture of your charts, yeah, and you can set as a template, there's a camera up here. You could like take it and just hit copy, and you can drop it right in the room. Todd, you're my hero for some of this stuff. You're teaching me some good things. So if you wanted to save it so that it was always yellow, what you could do is exactly what Todd said. You could add text, and then when you come through here, you can apply defaults probably, right? Or save it as a template. Template name is yellow text. And then you're good. And then even more so, you could favorite it. And you could have that yellow text template right up here next to the box that you use all the time. I don't annotate on my TradingView charts. I annotate through Snagit, but that's great. If you didn't want to use Snagit, you could knock it all out on here. That's pretty cool. I'm always learning, guys. I am always learning. Lenny, strong triggers, potential to break. You did trade directly into a termination condition, Lenny. This is what I just want you to give me a why in the room. I want you to say, if you don't mind, Mark, I see that fib. I see no triggers through it. I recognize it as a termination condition. Why do I say that? Because, Lenny, your beautiful entry and your aggressive management before it gets back to trouble lets me know that you knew about it. And because you knew about it, all you did is you said, I've got all the momentum in the world. My path isn't the best. My entry is beautiful. I'm going to manage this trade, right? I may have to manage a little more assertively. I may have to get out if things change. I love it, Lenny. Great usage of advantages. Beautiful, beautiful entry. Awesome management because you're trading into trouble. Well done, Lenny. Nice to see you in here. I love it when you guys come back and say hi to me. All right, Derek. Question. Above 3 triggers going with trend, but not much of a path. So when you say not much of a path, are you saying not much room to get to that red fib? Cool. So let's do a quick lesson. You're going to love this, Derek. And I've got the picture for it. Hey, Sword Trader. Good to see you. Welcome to the room. This is my favorite picture for this lesson. And Derek, this is one of the most common questions that, believe it or not, that I get. So I've got a well-rehearsed answer for it. When it's time to look for that entry, there's this little hesitation because there's only 8 ticks to get to the thing that could stop the market, right, Derek? And you're like, that's not a lot of money. So here's the cool thing. In order for one of these lines to be defined as trouble, right on, price must reach the area for it to be a termination condition. It goes back to language again. That line, it's a target. Make sense so far? That's going to be a target. But it's not a target from 8 ticks, Derek. It's a target from the pullback to areas inside of triggers. And now that 8 ticks turns into 32 ticks because of your amazing entry. So if we look at your chart again, you had, well, that was really close, but you only had like 2 ticks to get there. But from 60, you had 23 ticks to get back. Does that make sense? So always calculating room to your targets from the entry, but not above pullback, right to the areas inside the triggers. From back here. Are we talking about back here? I'm sorry, I was looking up here. So from here, from 43 to 63, that's $200. That's $200 worth of profit with momentum and a clear path. This is the perfect trade, Derek. And you had room to make $200 before you even knocked your head on something that could create a bounce. Does that make sense? So always calculate. I'm sorry, I missed your big yellow box like a Yahoo. Always calculating from where your entry is, not from where your reversal starts. Does that help a little bit? It's pretty common. Yeah, great question, dude. And I promise you, you just helped 5 other people. Whoa, dab. Man, dab, I don't know what this is. At open, wait for obvious breakout, has to pass the first area of chop, on at a fib, follow the trend, out on the pullback, couldn't figure out how to close the trade, paper trading. Buy 2 on aggressive pullback, fighting the down. Man, I love it. I love that you're going with the down, right, Dab? And you've got an idea. Why don't you have triggers? All right, so Dab Chain, do me a favor. Take your trading view ID, email that to Jason in Tech. Oh, right on. So if you email this, that ID, not email, go through the Discord text. Sorry, John. I'm going to go to the instructions real quick. So what you're going to do is you already have your account. You just read the For Idiots guide. Hey, that's for me. You're going to email Jason. He's going to give you access. And John says you lose 2 notches on your man card for reading directions. But we'll get you everything Nexgen on there. And you've already paid for software, so it's on John Novak today. Hey, Jen, look what that VWAP did. Pretty awesome, right? Damn VWAP. Ex-wife already pulled your card. We're going to find it one day, Dab Chain. It's probably floating in a sewer with mine. And Jen, what that termination means is that pullback to the HVA was your one shot at a short from the termination. And look what it's doing. It's still going down. That is the one trade in the plan that fights the small triggers, and it's because of the termination. So if you're never fighting the triggers, the HVA isn't your trade. If you're following the checklist for any of the 3 trades, first it's a term, smalls get below the large, sell a pullback to the HVA, and just scream wee as it goes down. That's it. You guys have a checklist for that one. That is the only time fighting those small triggers tends to work out for you. You'll get lucky every now and then. Guys, great class today. Did you learn anything? TB50, how we doing, man? You're quiet in here. I know you're relatively new. I know you're looking at TradingView. Is it starting to come together? Starting to make a little sense, I hope? It takes usually about 3 days. About 3 days to start learning language. About 3 days to start recognizing patterns. How to make a nice win look tiny. Thanks, FOMC Day. Nice job, Joe. I hate FOMC Day. That's just me. Oh, I'm sorry. Did I miss your last picture, Victor? Am I near the correct zip code? Let's find out. All right, so let's see. Small triggers pointing up. Current price on the strong side of triggers. And did you have room to targets where you were looking? You didn't cover that on there, Victor. Did you have room to targets? Where are we talking? Hold on. That's the third thing always. And of course you cut those off, so I can't tell. But you're right. The trigger's on the small chart roll. So you're looking for it to come back to the area. And it does by a tick. There's your close on the correct side. And there it goes. So Victor, the highest chance of success is making that zone, right? If you're a tick off of it, and I think you were a tick off of it, the concept is the same. And it's okay to wait for the zone, Victor. It's all right to wait for the area to enter. But do you see how once it gets to the correct side of the small triggers, that's when the upward starts? That's the lesson to take on this one. Your large chart read is great, but that's the lesson. Because what happens, and when I say what happens, I'm talking about what happened to me, Victor, is, well, you could have taken the momentum trade with strong triggers, and it tries to go up, and then it smacks right into those small triggers, and then it pushes right back down, right? And it's not until it gets above them that it really starts to move. So whichever bar finishes, so what I'll do, Victor, and I'll show you what it looks like live. That one's not going to give it to me. See if I can find one that's kind of doing it in the moment. All right, so if my rules say, and they don't, I need a close on the correct side of the small triggers, I'm literally waiting for this bar. There it is. There's my close. I'm mashing a sell button, right? Once it closes on the good side of those triggers, that's when I'm hitting that sell button. And I'm just clicking it. And I'm putting my stop behind whatever zone got me in. I'm putting my profits wherever I'm hoping it goes. And of course, this fights everything on God's green earth, so I'm not going to say in that trade. But that's exactly what you're doing. You're like, no, 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 go. And when it's the right trade, I'm looking for it. And this is why we don't, Victor. Shoot. Look at the strong triggers. Gets to the mid band, doesn't close below, continues up. Gets to the HVA, doesn't close below, continues up. So that close on the small chart, or that close on the correct side of the triggers on the small chart, really pays dividends. I like it, Victor. I'm looking for you to do it. I'm excited for you to do it. John says, I'll fight some triggers. Should go down again. Shouldn't do anything, right? Strong triggers. Triggers down. That's right at an area. And these triggers are up. So a little conflict of interest. John has a plan that I don't understand just yet. And with those triggers up, yeah, John, I just don't understand what you did there. I don't have John's plan in front of me yet. It's called sell resistance. There you go. It's called sell resistance. So the question would be, how did selling resistance work when the small triggers are up? New users. There might be a lesson here. And John was already in the trade coming up, so there's a John Novak way that relies on the time you've spent studying the indicators, and then there's the new user way that relies on the understanding that you're still new. Keep it easy. Keep it easy, keep it focused. All right, guys, let me give you today's video.